Hello friends, in this lecture I am going to discuss a new topic with you, that is past adjustments. A new topic, that is past adjustments. Clear? Now what is it? As the name says, it means that we have to adjust something we have done in the past, right? We have to change, that is something done in the past. Okay, and from the accounting viewpoint, if we say we have to change some part of accounting, which accounting that we have done in the past. Clear? Now I'll explain this with a very simple example. Let's say in a partnership firm there are two partners, X and Y, sharing profits equally. Okay, and they have the capitals of 1 lakh and 1 lakh. Interest on capital 10%. Profits for the year are 2 lakhs. Clear? Now what happened is, on 31st March, on 31/3/16 they closed the books. They closed books without providing for interest on capital. What it means? That the partners were to given interest on capital, the firm had to pay interest on capital to partners, right? But by mistake that interest on capital is not accounted for in the books, right? That means they prepared the profit and loss appropriation account. On the year end they prepared appropriation account, right? In that what they did was, by profit 2 lakh, and they omitted interest on capital and they directly said to transfer to X capital 1 lakh and Y's capital 1 lakh. They forgot about interest on capital, right? What should have been the actual profit and loss appropriation account? If I talk of actual profit and loss appropriation account, then it would be by profit 2 lakh, right? Here to interest on capital, for X 10% of 1 lakh 10,000, and for Y 10,000. Total 20,000 interest on capital, and the remaining profit is 1,80,000 to be divided equally 90 each. To profit transfer to X 90,000, Y 90,000. Clear? What they did was they omitted the interest on capital. Whatever profit is transferred from profit and loss appropriation account, they directly distributed among partners equally. Now after the closure of books, they realized that the interest on capital is not accounted for and the profits have been paid extra to the extent of interest on capital. because the profit should have been 90,000 and X have been paid 1 lakh. Similar for Y. They are paid extra profit of 10,000 each. Clear? Now what they do is, to rectify this problem, to open all the books, right? To open all the books of account is a tedious job. You have finalized all the accounts, okay, after 31st March, after the closure of accounting period, you closed all the books. And after the closure, you realized that interest on capital has not been paid to the partners. Now what? One alternative is you open all the account books and change the entries at single point. Right? But that becomes a very tedious job. You will have to change all the books. Wastage of time. Now what they will do is, they will pass one single journal entry through the partners' capital accounts and they will rectify the problem. How? Let's see. For that, they will prepare one statement. Okay. They'll prepare one analytical table. Statement showing adjustment. Clear? In that, I'll have partner X, Y and total. Under X, I will write debit, credit. Under Y, I'll write debit, credit. Now, here I'll take interest on capital is to be given to the partners, that is to be credited to the partners. I'll write interest on capital. How much? 10,000 credit to X and 10,000 credit to Y. Total credit is 20,000. Now see, here I told you that the profits have been given extra. 10,000 each, the profits have been given extra. That means the partners' capital accounts were credited with 1 lakh, but they should have been credited with 90,000. Right? So the partners have been given the extra credit. Now what will I do is, I will reverse that. I'll say extra profits distributed. $10,000 for this, and okay, I'll take this example a little other way. I'll say they do not, what they do is, they're sharing the profits in some other ratio, not 1:1, because that will not serve the purpose of the question. I'll say they're sharing profits in the ratio of 3:1. Right? 3:1 means they are sharing as 1,50,000 and 50,000. What should have been the actual profits? 1,80,000. 1,80,000 into 3/4. Right? it should have been 45,000 into 3. 1,35,000 and 65,000. Now what they are paid is 1,50,000. I'll show you as a separate working note. Here what should have been paid is 1,35,000 and 65,000, but they are paid as 1,50,000 and 50,000. Clear? Now if I talk of X was paid 1,50,000. He should have been paid 1,35,000. Right? That means he is paid 15,000 extra. Y is paid 50,000. One second. There is 1,80,000, 45,000. Interest on capital is 20,000. Okay. Now why should have been paid 45,000? Clear? So he is paid 5,000 extra. Here what will happen is, now the profits, how much they have been paid extra? X has been paid 15,000 extra. I'll take it as 15,000. And how much for Y? It is 5,000. Clear? Now take the net effect of this. This is 20,000 debit. This will be okay. Now for X it will be 5,000 debit, and for Y this will be 5,000 credit. Clear? So the entry will be X capital account debit 5,000 and Y is capital account debit 5,000. Sorry, capital's account credit. To Y's capital account 5,000. This will be the journal entry. See, there's nothing in it. We say that there are two partners, X and Y, sharing profits in the ratio of 3:1. The capitals is 1 lakh and 1 lakh. Interest to be paid at the rate of 10%. Profits are 2 lakh. Now on 31/3/2016, they closed the books without providing for interest on capital. So that means they prepared the P&L appropriation account as profit 2 lakh, and they straight away distributed this profit among the partners in the ratio of 3:1. Clear? So this profit comes to 1,50,000 and 50,000. Clear? What should have been the actual profit and loss appropriation account? It should have been by profit 2 lakhs. Then first the interest on capital is to be provided as 10,000 and 10,000, total of 20,000 as interest on capital, and the remaining 1,80,000 is to be distributed among the partners. Clear? Now this figure comes to this comes to 1,35,000 and 45,000. Clear? That means they have been paid extra profit to the extent of 15,000 for X and 5,000 for Y. Because the actual profit which should have been distributed is 1,35,000. They have been paid 1,50,000. Clear? So what will they do is they will prepare a statement of adjustment where we will take the partners X, partner Y, and the total for the firm. First of all, what is to be given to the partners will be credited to the partners, like interest on capital will be credited. Then whatever extra has been credited to the partners will be debited back. What is extra credited? That is the profits. Profits have been extra given. Why the firm will pay extra profits? The firm will ask, give me back the profits. Okay, so X will pay back 15,000 and Y will pay back 5,000. Clear? Then calculate the net debit and credit effect. For X it is 5,000 debit because its debit is more than credit. For Y its credit is more than debit, so 5,000 credit. That way we will get our journal entry, that is X capital account debit 5,000 to Y's capital account 5,000. Right? This is the rectification entry. This is how we prepare the past adjustments. In the next lecture, we will do some practical problems on past adjustment. Clear? So you can write this down.